Tokenization. I mean, some of you guys, if you're new, that haven't been in blockchain and crypto, might have never heard this term before. But think about real world assets coming on these blockchain networks. I mean, global real world assets. We've seen figures in the frame of, $10 trillion by 2030. We've seen 15, $20 trillion and beyond by 2030. I'll share with you some of the entities that are giving these figures to us. I mean, we can see right now we're at like $12 billion tokenized. That's obviously way lower than $10 trillion. But just some of the impacts here, showing some, this site with you guys where we may be headed, which I think is a really valuable tool as well. You won't see the mainstream media necessarily talking about, charts like this, things like that. But also Quant, which is a blockchain network, and their regulated liability integration, regulated liability network, which is pretty massive, essentially sitting right alongside UK central bank money. Hedera has a asset tokenization studio, but I wanted to start with this. So if you guys never been to this site before, it's app.rwa.xyz. This gives you like a really succinct global market overview of tokenized real world assets. I mean, and you can even get into the different asset classes here. So United States treasuries, global bond markets, private credit, commodities, and stocks. I'm of the opinion, and you can see you'll see here in a second, some of the other entities that are of the opinion that a lot of financial assets that exist out there globally become tokenized and start operating on some of these blockchain networks. So right now I can go to, global market overview here. You can see total real world asset value. I mean, even look back to 2021, this July of 2021, we were like way below even $1 billion being tokenized, almost nothing, right? Fast forward to January of 2023, we hit this $5 billion tokenized threshold. Fast forward even further to, where we're at now, right around $12 billion tokenized. If we, something to put into context here is you can filter through, including stable coins and real world assets interacting. And go back to 2020 here. I mean, it's very similar, right? 2020, stable coins right at $4 billion, commodities, $13 million. And, we fast forward to, I guess right now where we're at, stable coins, $175 billion, private credit. You can see U.S. Treasury debt, commodities, corporate bonds, stocks, non-U.S. government debts. And go back, let me go back and exclude stable coins, and you can just, make some assumptions about where we may be headed here, right? This is really interesting as far as these global markets are concerned. You can even go through entities and some of the networks, Ethereum, Tron, Binance Smart Chain, Arbitrum. These are all blockchain networks, Avalanche, Optimism, Stellar, issuers. I just find this to be like a really, really fascinating site. I don't know if you guys have ever been to rwa.xyz before. Hopefully they don't put this behind a paywall at some point and make you kind of subscribe to a site like this, because I think this is a really, really valuable tool. Again, you won't see any of the mainstream news sources talking about a site like this, and I think that it just puts into perspective where we may be headed. Getting into some broader I guess, forecasts as far as where tokenization is going to go by 2030. I mean, you've got some pretty heavy hitting advisory firms and banking entities making predictions and all this stuff. I mean, and again, to put this into context, right now we're sitting at $12 billion, 12 billion of assets on chain. It might sound like a big number, but that is not a big number when you start thinking about in the context of multiple trillions, tens of trillions of dollars. Right now, 12 billion. By 2030, you've got McKinsey and Company predicting 2 trillion. Boston Consulting Group, 16 trillion. Bank of America, going even further down the rabbit hole here. We saw the 16 trillion. Citigroup, 4 trillion. HSBC predicting 24 trillion by 2027. Yeah. So, I mean, we've had, I guess the question you have to ask yourself is, which networks are going to start taking some of the market share as far as tokenization is concerned. There's a lot of factors that tie into that. Obviously, you want kind of forward-thinking, regulatory clarity driven, networks, and then you need kind of the speed, and you need liquidity, you need all the other aspects that come along with it as well. I just find it pretty fascinating, and this space in crypto and blockchain changes so quick, and there's certainly a lot of like hype-driven narratives. But when you think about tokenization of real-world assets, I mean, you've got some of the biggest players in the world. You've got, even look at like yield tech and U.S. Treasuries, right? So this is runs on XTC network, but the fund manager of this ETF is BlackRock, right? You've got, and I'm sure most people that are familiar with Ripple and Hedera and stuff like that recognize Archax and tokenization. They've tokenized on Algorand, this Quantos URD, essentially a digital euro with atomic swaps back and forth. You can think about Ripple and Archax bringing tokenized real-world assets to the XRP ledger. Archax, along with Aberdeen, tokenizing a BlackRock fund on Hedera. I mean, it's just really kind of fascinating where this is going to go. And, it becomes a question of like, what's the infrastructure? What's the value of the infrastructure that these tokenized real-world assets are existing on, I guess, is what I always have to ask. And it's like, what's the value of these networks? Not just like the underlying cryptocurrency asset of these networks, but what's the value of the networks themselves? And I think that's going to be really, really interesting to watch in the future. So yeah, RWA.xyz, kind of looking out across the broader crypto space. This is about as massive as it gets as well. I think a lot of people sleeping on what the Quant network is doing. I guess to put into some context before we get into today's announcement, Quant network is integrated with Regulated Liability Network. If you're not aware of what Regulated Liability Network is, this is it in broad strokes. The Regulated Liability Network is positioned as a financial market infrastructure that operates a shared ledger with central bank money, commercial bank money, and electric money on the same network. I mean, I've read this before, but I mean, think about the impacts and just the scale and scope of something like this, especially when you think about like how a lot of people talk about crypto and blockchain and everything's a scam, but it's like, this is literally telling you that the technology has legs to the point of that it's interoperating with central bank money, commercial bank money, and electric money all on the same platform. Why would that be? UK Financial. So this is the announcement that came out today. We're delighted together with R3, the infrastructure platform, building digital solutions for financial markets, to welcome the publication of the results of the UK Finance's UK Regulated Liability Network project. Quant and R3 were selected by the United Kingdom's Regulated Liability Network alongside DXC Technology and Coadjute as technology partners, and exploring a number of use cases, in particular the technology workstream which delivered the multi-issuer blockchain-based tokenization platform. Again, tokenization, right? Which is a comprehensive integration, or API, I'll just call it API and integration, for interaction with all forms of money, and an orchestration layer, implementation of the orchestration layer seamlessly connected the tokenization platform to different ledgers and integrated with existing systems such as open banking, Project Rosalind, and simulated real-time gross settlement. Together with other participants, Quant and R3 reviewed and worked on various technical, legal, and business use cases surrounding the development of a regulated liability network. The conclusions are such a platform as the Regulated Liability Network, in collab with other important initiatives such as open banking, could deliver economic value and support innovation in the market. Functionality like programmable payments, locking and unlocking of funds could be delivered across a range of use cases. It can provide new and innovative firms with a single common point of access to enable them to interface with well-established institutions and enhanced payment and settlement systems. The legal and regulatory framework of the United Kingdom is sufficiently flexible already to support the implementation of a regulated liability network. This is dealing directly in Overledger, so interoperability. Every year, over 11 trillion pounds worth of payments are processed in the UK, powering the economy. The success of the regulated liability network experiment shows the potential of technology to transform the customer experience, deliver economic value. Again, this platform can work with important initiatives such as open banking, economic value, programmable payments, locking of unlocking of funds, single common point of access, interoperating with settlement systems. And what is this regulated liability network that Quant and R3 have been chosen to facilitate? It's a shared ledger with central bank money, commercial bank money, and electronic money on the same network. So I'll let you kind of figure out what that might mean. But I think that that's pretty massive. I want to give a shout out to Hedera ecosystem. Again, pushed a video yesterday about the source code of the Hedera network totally transitioning into the Linux Foundation's decentralized trust under this project Hyro, which I think is pretty massive. Hedera, premier founding member alongside DTCC, Hitachi, and Accenture. Tons of other members involved in that, including Ripple and a bunch of blockchain initiatives, Energy Web, and all these alongside kind of all of these traditional financial incumbents. And Hedera just last night released Hedera's asset tokenization studio. So again, tokenization, we wrote an article on it if you want to read it. On-chain regulatory compliant real world asset management. You can go to hedera.com/asset tokenization tax studio and kind of deep dive into all of this as well. 50 million plus in tokenized assets on Hedera, transaction fees, all this other stuff here. But again, I think I would be really it's going to be really interesting to watch a chart like this as far as real world assets being tokenized. This, from my small input here, is legitimately a drop in the bucket as far as where we're going to see this chart in the future. I mean, you can see all of the heavy hitters like I just talked about, talking about multi-trillions tokenized on chain on these blockchain networks. And even that, when you put it into the context of things, and because obviously, this is leading up to 2030, and we see estimates of 2 trillion, estimates of 10, estimates of 20 trillion. But once, that foot's in the door, they're obviously going to tackle tokenization for highly illiquid or fragmented markets right now to alleviate pain points in the current system, right? But once you get a foot in the door there, what's stopping, global assets in general to be tokenized on ledgers that are just much more efficient, being able to interoperate? And I've had the opportunity to interview a bunch of people, like tons of people. I was going to put together some clips for you guys here, but over the past year and a half, 2 years, I can think of a lot of kind of synergy in the way that these blockchain networks and their dealings with like the traditional banking systems and everybody else. It's not just about tokenizing these assets; it's about what you can do with these assets once they're tokenized. And that's really kind of the key here. Is it's like, how are our normal citizens that don't have access, like you, me, everybody else that is probably watching this video, that don't have access into some of these either investment opportunities or whatever, even just traditional investment opportunities? Does it open up the door for them, right? When you talk about defragmenting and like assets that may normally be illiquid and are not transferable super easily, or you have to go through brokerages or whatever. What's the world going to be like in 10 or 15 years when you can buy fractional shares of a stock, like without having to go through a bunch of red tape, or investing in, corn or whatever, like legitimately whatever. When you start kind of having all this stuff interoperate, when you start having like money, because at the end of the day, like money's digital right now. We all use our credit cards. We all do X, Y, and Z. It'll be interesting to watch how the stable coin or, the deposit backed stable coin stuff flushes out. The CBDC stuff seems to, it's still going on, but it seems like there's not as much regulatory clarity as needed to kind of push some of that stuff through, especially in like these bigger nations. I've always been interested because like you know, stable coins are fine when you start pegging stuff to the dollar or backing stuff to the dollar or whatever. But at the end of the day, it doesn't necessarily fix like financial policy and all the other stuff. You know, inflation's been skyrocketing for however long for a reason. So when you kind of weaponize that and add in a layer of technology, does it like accelerate kind of the downfall of the financial system? I guess will be interesting to watch too. But at the end of the day, I mean, these assets are 100% being tokenized. They're coming on chain. Again, this is literally just a snippet in time here. You've got basically from 2021 to now, basically nothing to $1 billion. And if I had to guess, if we look at this chart for real world assets being tokenized in another 3 or 4 years, where we're at here with this peak right now is probably going to look like nothing. So it'll be really, really interesting to watch. Outside of the Quant Regulated Liability Network news and the Hedera Asset Tokenization Studio and just the tokenization RWA.xyz chart, that I would strongly recommend the RWA.xyz. Go and take a look at that and mess around on that tool because it's really kind of cool and interesting. You've got DBS, which I think is I think they're the largest bank in Singapore, or one of the largest banks in Singapore, launching crypto options trading and structured notes for institutional investors and wealthy clients. You've got private sector partners joining Project Agora, Bank for International Settlements here. This is more than 40 private sector firms. It's talking about wholesale cross-border payments and how they're happening today, and when there's failures along the messaging system lines, and then injecting in smart contract functionality. And then you've got Trump talking about World Liberty Financial. This is actually a pretty decent article here. The platform being described as a decentralized finance money market, or a platform where people can borrow, lend, and earn interest on crypto. The only team so there was an interview that Trump did on with the Rug Radio guys in crypto last night, and I guess the only thing they talked about was there's going to be kind of a new cryptocurrency, but it's not going to be transferable. And then the article author here says it's unclear why anyone would buy a token if it's non-transferable. What's the point of it? That's the question everyone in crypto is likely to be asking. So apparently this is going to be like a governance token called WLFI, or the ticker for World Liberty Financial, which will not be transferable, will not earn yield, can only be used to vote on changes for the project, hence the governance token aspect. As 63% of the supply sold to accredited public investors. No pre-sales or VC allocation. I thought I saw something about Reg D offerings. But yeah, I mean, it's interesting to watch. At the end of the day, I'm more interested kind of in looking at kind of the big picture stuff here, where these, the importance of the underlying technology, the importance of these underlying ledgers. Again, my thought process is real world assets. When we talk about like U.S. treasuries, global bond markets, private credit, commodities, stocks, real estate, all this stuff coming on chain. Gotta think that this is literally just a drop in the bucket, and we're not alone in thinking. I'm not alone in thinking this. You've got some of the biggest firms in the world, some of the biggest banking entities in the world, kind of talking about this stuff as well. And always interesting that you don't see, the mainstream media that we see talking about crypto. They talk about it through such a polarizing lens. Bitcoin crashes 7%. Which I know for those of us in crypto know is like nothing. Bitcoin crashed 7%. I even was watching, the news, and I think it was like in Florida or somewhere. And it was saying that like crypto scams take over, and how people are getting scammed. And of course there's, crypto scams, and there's scams everywhere. But at the end of the day, like they don't ever talk about like what these central banks are doing. They don't ever talk about all of the real world kind of tokenization or tokenization of assets that are already coming on chain. I mean, to the tune of $12 billion plus. They're certainly not talking about some of the numbers that are being floated around from some of the biggest advisory firms in the world. So Boston Consulting Group, McKinsey, 4 trillion, 16 trillion, the banking entities. you see these banks, opening up options to wealthy clients and investors. I don't know. It's just always interesting. It's like more of a watch what they do and not what they say type thing. We know mainstream media across the board is kind of already bought and paid for. So all we can kind of do is stay in the know as much as we can, and watch how this technology gets adopted. It's really interesting. Again, I brought up tokenization across the board with a lot of these heavy hitting networks, and I know I missed a ton of networks here. It's really difficult to stay abreast of everything, obviously, but Ripple certainly dealing with tokenization, Hedera certainly dealing with tokenization, XTC network and Securitize, and the stuff going on with Yield Tech and a BlackRock managed ETF. I mean, there's Algorand, there's again, I mean, this RWA.XYZ shows you, and I know that there's probably a lot of networks on here that need to get onto this site too. I mean, I would hope that any network dealing in tokenization and crypto takes the opportunities to actually showcase that they're tokenizing real world assets and gets on these types of sites. Right now we see Stellar, Near, Optimism, Avalanche, Base, Solana, Arbitrum, Binance Smart Chain, Tron, and Ethereum. So yeah, at the end of the day, interesting to watch what's going on. Use these sites as a tool. I hope it helps. I was kind of pissed off today because I used to use this site just looking like zooming back from Bitcoin and looking at the broader space. There was a site called lookintobitcoin.com, and it was acquired. I rarely look at charts for crypto prices at this point in time, just because honestly, like, that'll drive you crazy. And I think that it's kind of, at least for me, it's kind of pointless. I like kind of zooming out, which means I don't really look at prices on a daily or a weekly basis, even at this point. So, but lookintobitcoin.com had all sorts of cool charts, like this zoomed out Bitcoin investor tool and all this stuff. And it was acquired by Bitcoin Magazine, and now the whole thing's behind a paywall, which really sucks. I mean, if you go back through my older videos, I even would share that site a bunch of the time. You can still use TradingView and input some of those indicators for free, but just sucks to see that stuff going behind a paywall, because at the end of the day, like, there's some really valuable tools on there. But RWA.XYZ is free to use right now. And I hope you guys enjoyed this video. I will talk to you when I talk to you. Thanks. Bye.